How to identify and trade flip zones using the supply and demand methodology. We are going to go through many examples so that you can start implementing this into your own trading and start trading today. I appreciate if you guys like the video, subscribe, and if you guys have any questions, you guys can always reach out to me on social media at Moneyball Austin. Let's get straight into it. Where I think a good start talking about flip zones is not necessarily how to identify them, but first talking about what is not a flip zone. Because I get people reaching out to me all the time and they're like, what's a flip zone? Is this a flip zone? And then they're completely wrong. It's not like support and resistance, where once you break support, it becomes resistance. Or once you break resistance, it now becomes new support. It's not like that at all. We need to remain disciplined and true to the methodology of supply and demand, where we are trying to identify where big money is coming into the markets, okay? So if we have here support and resistance lines, some people will say that's resistance, that's support. The whole concept of support and resistance is you want to sell at resistance, buy at support, right? Or that those are areas of interest that you want to look for. In support and resistance, if price breaks above resistance, that new area becomes support. And then people will look to buy back on that area of support. Okay, this is not true at all when we're trading flip zones. Just because you remove an area of structure or opposing supply or demand zones, we're going to get into examples, doesn't mean it's a zone or called a flip zone. We need to remain disciplined, like I said earlier, to the methodology of what is supply and demand. So the four patterns, as you guys probably know, we trade four patterns using the supply and demand. We use drop-based rallies, rally-based drops, continuation patterns, which are rally-based rallies, and drop-based drop supply zone. I will pop up a picture of what these supply and demand zones look like. You should already know, but if you don't, I will have videos in the description below to help you with this whole trading strategy using supply and demand. Okay, but we need to remain disciplined to these four patterns that are supply and demand. The whole concept is we're trying to identify where big money is buying and selling at. Okay, so if we look at this, we've talked about what is not a flip zone, and I'll see some people going like this. So if market's trending down and then breaks up and starts removing these areas of supply, so if we remove that area of supply, this area here does not now equal demand. It's not a flip out zone that you trade once prices pull back into this area. You don't buy the pullback because it removes supply, thinking, okay, we have new demand here because we remove supply. No, we have to remain disciplined to what is true supply and demand patterns, okay? So in this case, what we would need to see is, say we have price trending down, prices rally up, they base for a little bit, and then they continue to the upside. Notice here how we are removing this area of supply, but we also have a new rally-based rally demand zone being formed. This is not prices like when we look over here to the left, it's not prices just blowing straight through it, and then we trade the pullback bouncing off of that like support line. Okay, that makes no sense. We want to make sure that we remain disciplined to our trading methodology. So one more an example before we get into the live charts is, say, for example, we're trending down. We're going down, down, down. We rally up, we drop down a little bit, and then we continue to the upside. Okay, this here would be your flip zone. This area right here. It's going to be a drop-based rally or a rally-based rally, this pattern up over here. Okay, let me draw this out for you guys. This top left image would not be a flip zone. This does not equal demand. Okay, we need to make sure over here to the right that we have a rally-based rally or a drop-based rally there that did all the work, that broke structure, that broke trend lines. Okay, that is what a flip zone is. And then people will look to trade the pullback back into that area. And that's if prices pull back down into that area of demand. We're getting long, hoping that prices go up from there. We would not buy this. Like, say prices are up here, prices drop, We would not buy that thinking prices are going to go up. We got good demand down here, and we have demand from down here and demand down here, but there is no demand in here. Okay, there is no rally-based rally or drop-based rally pattern. Okay, so now let's look at the live markets. Now we've talked about what is not a flip zone, like we just discussed. Just because we remove an opposing supply or demand zone doesn't make it a new demand or supply zone. Okay, just because we break above supply doesn't mean we now have demand. It has to represent one of the four patterns that I will once again flash it on the screen for you guys. That photo, it has to be one of those patterns. Okay. And so if we're looking here on the dollar, the last area that I really see to be declared a flip zone was back here on the 4-hour chart here on the dollar. And at this time, we are trending lower lows and lower highs. These are great, don't get me wrong. These are all areas that I wouldn't just sell straight up, but I think they're great little zones for selling opportunities. Yes, we have supply here. We have great supply over here. Those are areas that I want to be looking for shorts at. Okay, we could talk about the quality for a fact for 1 second. This is a previous video I actually just uploaded talking about uh, the common mistakes and how to identify high quality zones. Those two videos will also be in the description below because we want to make sure that we're trading at high quality zones, right? Zones that have strong 2-to-1 imbalances, zones that remove opposing zones and break trend lines. And these are just two things that we need to make sure that these zones have. And all those zones that I just circled have strong imbalances. They remove the opposing zones. Those are good areas. Now, this right here would be a flip zone. This demand right here. It's a rally-based rally demand. It has a strong move to the upside. We remove supply. This does not equal demand. Okay, this new area, because this is where we started to remove the supply from, like this here is where we took off. That does not mean demand. That is not a flip zone. It's not like support and resistance, right? So we have to go to where the origin of where that pattern started from, and that is that little rally-based rally right there. Okay, and sure, we have little drop-based rallies down there as well. Okay, let's talk about another example. Let's talk about a supply setup. Let's actually just go to my trading view profile. If you guys want to follow me on TradingView, I know that's something that you guys can do. That will also be in the description below, but it's just Moneyball Austin. I appreciate so far if you guys like this video. You guys are learning a lot about flip zones. Subscribe, okay? I appreciate that. Make sure I'm recording. Okay, good, I'm recording. You'd be surprised. Sometimes these videos don't get recorded and I'm like 10 minutes in. Actually, that's a very nice painting. Hey guys, I'm here in Brazil, and it's a wooden painting. I don't know what to call this. Painting, I guess. It's a picture of the favelas here in Rio de Janeiro. Absolutely beautiful. I love this thing. At first, I was like, oh man, that's really stupid. It's really grown on me, and I love this thing. All right, let's continue. So let's talk about flip zones. This is actually a good one on Bitcoin. So on the weekly chart of Bitcoin, I've been bearish this. We have support and resistance actually right here, support. We broke it. So now this area would now become resistance once prices come up, back up over here into it. But we are also coming into a drop-based drop area of supply, okay? This would also be known as a flip zone. This is where you could use a flip zone because it's a drop-based drop. If we just continued straight down, I wouldn't declare that a flip zone. I would just declare it resistance, okay? Because we had old support, now it's broken support, it's now resistance. But because we dropped and we based out here sideways and it represents a drop-based drop pattern, we can call that a flip zone, okay? So we have prices coming back up into a weekly area of supply, which is also resistance. So it's a good area for selling opportunities. Now, we could actually just go to this chart on my data feed because it's scrolled in easier. At this point, we started going sideways, and then we were up in a sideways range here. People would see this as support and resistance. That's kind of what I was seeing it as buyers seem to be stepping in down here, sellers seem to be stepping in up in this general area. So it's kind of support and resistance. You could look for buys at the bottom, you could look for shorts up top. Okay. But here we finally broke down from it. We broke down from that supply, and we have a drop base drop supply zone. Remember that picture I showed you guys? Look, as long as the flip zone removes an opposing zone and it looks like a tradable supplier demand zone. Okay, so in this case, we have a rally base rally breaking that supply, or we could have this area here where it's a drop base rally, but it's not just blowing straight through it. We can't call this area a flip zone. So if we go back to that crypto chart, it's the same thing on that weekly time frame. That supply over here, if we just drop straight down, that would just be resistance. But if we drop base, 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 drop, well, now it's a supply pattern, which is also lined up with resistance. And we could use that as a flip zone or just supply or slash resistance. That's totally fine. But if we were going down to the 4 hour, it's good because it's the same thing on just different time frames. We were sideways range, we would then hit the bottom, and then we broke down. If we just went straight down without creating a drop base drop supply zone, then I wouldn't call this a flip zone. I would just call it resistance breakout or whatever. But because we also have a supply pattern, which is an extra bonus, if you just want to call it support and resistance, whatever you want, sure. But if you're going to trade flip zones, it has to be a supply or demand pattern. Okay, so in this case, you have a drop base drop supply zone that broke the demand slash support. Okay, and now traders might look to sell that when prices return back up here, or some people might have gotten short when prices pulled back over here the first time. Both are valid. That's totally fine. Now, when it comes to quality, every zone is going to have, like, this is one tip. I don't recommend trading at continuation patterns. This is a video that I just uploaded talking about the 5 common mistakes that I see supply and demand traders making. Number one, I'm going to have that in the description below, but one of them is trading at continuation patterns. I don't like trading at these drop-based drops or rally-based rallies as my entry time frame zone. They're good on the higher time frame, but when it comes to the entry time frame, I'm not a fan unless you have a bunch of other things. Like you have a breakout retest, you have now support and resistance, and it represents a supplier demand zone. So in this case, we kind of have all three. So that's why I can understand this actually is a good trade in my books. But when it comes to just a generic continuation pattern, I don't ever recommend people trading at it. But if we go back to that dollar, we do a quick recap. Just because we break resistance or support supplier demand zones doesn't mean we create new flip zones. These zones have to resemble a supplier demand pattern. Okay, so these two would not equal flip zones, not unless we have a new supplier demand pattern like we have here being created or here being created. If we just blow through these areas, they don't equal a flip zone. Okay, I think you guys really understood this lesson talking about flip zones and how to properly identify them and trade them. I have a whole trading strategy on my YouTube channel talking about the whole supply and demand trading methodology. So if you go to my YouTube channel playlist and then scroll down to tips over here, there's going to be a full course video for you guys to learn all about the trading methodology of supply and demand that I would strongly recommend you guys checking out. And if you guys wanted to learn more and join the private Moneyball trading program where we're trying to take traders to consistently profitable in 90 days or less, check that out, moneyballtrading.com. That will also be in the description below. And that's where you can get a free ebook on the supply and demand methodology. Okay, guys, so once again, I appreciate if you guys like the video, subscribe, and I'll see you guys in the next one. Thank you guys so much. If you guys have any questions, let me know. Cheers. Bye-bye.